Ladies and gentlemen, good day and welcome to the Q3 FY22 earnings conference call of Max Ventures and Industries Limited. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sahil Vachani, MD and CEO, Max Ventures and Industries Limited, for his opening remarks. Thank you and over to you, sir.
Thank you. Good morning to all. Thank you for joining us on the Max Ventures and Industries Q3 FY22 earnings conference call. I hope you and everyone around you is safe and in good health. Joining me today, we have our CFO, Mr. Nitin Concall, Mr. Rishi Raj, our Chief Operating Officer, Mr. Rohit Rajput, CEO of Max Asset Services. We also have SGA, our Investor Relations Advisors, on the call. The presentation has been issued to the stock exchanges and uploaded on our company's website. I hope everybody has had this opportunity to go through the same. Just to give you a quick strategic overview of Max Ventures as it stands today. As many of you are aware, our company has pivoted our focus to the real estate business, and we've exited the packaging business during the previous quarter. The transaction is expected to be completed within a fortnight from now, and we expect to receive anywhere between 600 to 650 crores from the sale. As per the understanding and agreement with Topan, we expect to receive the first tranche of payment, which will be close to 80% of the sale value in a fortnight, and the balance 20%, which number has been agreed before end of June 2023. Moving forward, we are also exploring restructuring options to merge the wholly owned real estate subsidiary Max Estates Limited to rechristen Max Ventures as Max Estates Limited. This change of name will resonate better with the business vision, strategy and focus of the company. Our vision and aspiration is to emerge as a leading developer in the National Capital Region while implementing our philosophies of both work well and live well across the commercial and residential projects respectively. We expect to utilize the proceeds from the divestment of the packaging business to fund new projects which we have in pipeline and thus to achieve significant scale. In addition, we will also look to develop projects in partnership with both domestic and international institutional investors as we have done in the past. Although it has taken us a little bit of time to close newer opportunities, we've built a very robust deal funnel working with a wide spectrum of associates. With real estate being the only focus for the company now, we are confident of 2022 to be a transformational year for our company in the real estate business, both with sizable deal closures in both the residential and commercial segments. The financials of the company as you see it now would comprise only of lease rental income from Max Towers and Max House Phase 1 and a small number from the sale of our first project 222 Rajpur. Both from Max Towers and Max House, the full revenue potential is not yet achieved and some of the units are still in fit-out phase. The revenue pool is expected to grow as Max House Phase 2 and our new project Max Square gets completed and thereafter leasing commences. Significant addition to the cash flow streams will also happen when we launch residential projects. Max Estates cash flows will gradually build up over time from only leasing inflow to leasing inflow plus the residential cash flows. Both these income streams will further build from few projects to multiple projects as we continue to add new projects. The company has also embarked on its ESG journey and sustainability will be at its core of all future developments. Having demonstrated success with our initial developments, 222 Rajpur, Max Towers, Max House, and in particular with all of them commanding a significant premium to the micro market pricing, we are confident to recreate the same in our residential real estate journey as well and create value both for our customers and all our stakeholders. With this, now let me hand over to Rishi for detailed business updates. Rishi.
Thank you, Sahil, for the strategic overview. Let me now give you the real estate business update. Start of Q3 FY22 witnessed strong leasing in commercial real estate business on the back of return to office and companies signing up new leases as they expanded their business. While pan-India net leasing as per JLL at 26.7 million square feet in calendar year 2021 ended marginally higher than calendar year 2020, the last quarter saw 41% jump on year-on-year basis. We witnessed much higher footfalls at Max Towers as well as Max House. We are delighted to share that we achieved 100% leasing of Max House in Q3 FY22, converting the inquiries to signing up of leases at significant premium to rental rates in the micro market. Very happy to share that the weighted average rental at Max House is at INR 125 per square feet, where micro market is at best in high double digits. Business had witnessed a very strong momentum, but unfortunately during the end of Q3 and start of Q4 due to the rising COVID cases, companies have had to again revert back to work from home to prevent the spread of the virus. We hope the third wave subsides soon and economy gets back on track with no restriction. A blessing in disguise for us this time is that both our completed projects, Max Towers and Max House, are almost leased out, so we do not have anything incrementally to lease out. Hence, we are kind of insulated from this third wave of COVID, at least on the leasing side of the business. Work on Max House Phase 2 and Max Square, our upcoming development, remains on track both in terms of cost and time, and expected to be delivered by Q3 of FY23, which is Max Square, and by August-September of 23, which is Max House. And we already started receiving strong traction of inquiries for Max Square at the back of proactive outreach to clients looking to as a part of their hub and spoke, a deconsolidation strategy to be close to where the talent is. We are confident of securing pre-lease deal closure as third wave subsides and economy will be back to normal. Now coming to Q3 updates particularly, total leased area at Max Towers now stands at 5.06 lakh square feet. Leased area attributable to Max Estate stands at 2.89 lakh square feet. Both at Max Towers, overall level as well as for areas owned by Max Estate, 96% of the office space is leased. This figure when we came in the last quarter was at 93%. Towers stood at 73 million rupees in Q3 FY22 versus 50 million rupees in Q3 FY21. On a full year basis, next year, we are delighted to share that we expect the total lease rental income on Max Towers to be in the range of 350 to 400 million. At Max House Dokla, 100% of the area is now leased out. The total area leased out area stands at 1.05 lakh square feet. Lease rental income from Max House stood at 24 million in Q3 FY22. As some units in the fit-out period, the full rental potential is yet to be achieved. On a full year basis next year, we expect the total lease rental income from Max House Phase 1 to be in the range of 150 to 160 million rupees. The weighted average rental rate continues to be at significant premium to respective micro market for both the office assets. INR 105 per square feet for Max Towers, and 125 per square feet rupees for Max House. The outlook. As started opportunities that are at different stages of these cycles, the theme of IR Day. All commercial real estate funds, we are evaluating more than 10 deals.
I'm sorry to interrupt you, Mr. Raj. I'm really sorry to interrupt you, but your voice is breaking up at the moment, so we cannot hear you very clearly.
Okay, can you hear me?
Yes, now we can hear you, but we lost you for the last few seconds, so I would just request you to repeat yourself, please.
Okay, let me know if it is clear.
Moment it is.
Okay, now coming to the outlook, as Sahil mentioned, that we are evaluating a lot of development opportunities and are at different stages of deal cycle, as we have explicitly called out on page 13 of the IR deck. On the commercial real estate front, we are evaluating more than 10 deals constituting 14 to 15 million square feet of leasable area, and of that, 3 are in due diligence phase. Of the 3, 2 deals are in Gurgaon, and 1 is the Delhi 1 deal, which is pending in NCLT for approval. Similarly, in a short span of few quarters, we have built a robust pipeline of deals across Delhi NCR for residential. We are currently evaluating 20 to 25 million square feet of sellable area. And of that, we are delighted to share that we have executed term sheet for 1 in Gurgaon with approximately 3 million square feet of development potential, and we are in the process of due diligence with expected timeline closure by March, April of 2022. While third wave of COVID has slightly slowed the progress for deal closure, we are confident of closing new growth opportunities in Q4 FY22 to Q1 FY23. Even on Delhi 1 front, there has been positive developments, with several objections to the plan withdrawn, and this hopefully will expedite the plan hearing process in NCLT in coming months. As we work out the finer details, we shall be more than happy to share the updates in the coming quarters. We are extremely excited about our future development pipeline for the year 2022 for residential as well as commercial, and make Max Estates one of the leading multi-asset class real estate developers in Delhi NCR region in the times to come. Now, let me hand over to Rohit to talk about Max Asset Services.
Thank you, Rishi. Let me give brief highlights about Max Asset Services. Our managed office offering, WorkWell Suites and Max House Okhla, offer flexible space to occupiers who don't prefer to have a long-term lease commitment. It saves a huge upfront cost for the companies and also saving them from the hassle of maintaining the office space. This segment has seen a strong client take-up in the last quarter as per reports of various international property consultants. We have created a 200+ seat managed office space at Max House, which is now 95% signed up. We're extremely encouraged with the response and will strongly evaluate launching WorkWell Suites at our upcoming projects as well. As a part of our WorkWell philosophy, we continue to differentiate our client experience by adding more amenities like a salon, an early learning center, shuttle services, badminton courts, etc., to improve the experience. We continue to bring in various F&B options to create a unique ecosystem for our clients to work well. We also continually engage with our clients to incorporate their interests and feedback to improve the client experience. Our events vertical Pulse organize sessions around wellness and sports while adhering to COVID protocol in the last quarter, based on themes such as theatre, health, well-being, and F&B.
with an aim to uplift our assets with the best-in-class facilities and becoming more operationally efficient. We are deploying various digital tools across all verticals, such as parking management, lift management, amenities booking, visitor management, and air quality monitoring. Revenue for MAS stood at rupees 65 million in Q3 FY22 and rupees 27 million in Q3 FY21. We expect the facility services business of MAS to pick up once the offices resume normally and avail its services. Now let me hand over to Nitin Kansal.
Thanks, Rohit. Good afternoon, everyone. Before starting with the numbers, an important point to note is that until the last quarter, our financials also included the numbers from the packaging films business. As we have exited that business, the quarter 3 FY22 numbers are not comparable to the previously published numbers. Our quarter 3 FY22 results now only include the real estate business, Max Estates, and our managed office business, Max Asset Services. The previous period numbers are also adjusted accordingly for the like-to-like comparison. Now let me give you the financial highlights for quarter 3 FY22. Consolidated revenue for quarter 3 FY22 increased by 134% year-on-year to rupees 382 million rupees. Let me give you a breakup of this revenue for quarter 3. Lease rental income from Max Towers stood at rupees 73 million, while the lease rental income from Max House Phase 1 stood at rupees 24 million in the quarter 3 FY22. We sold 3 villas in 222 Rajpur during quarter 3, which contributed to a revenue of 190 million. Income from Max Asset Services stood at rupees 65 million. Other related ancillary income stood at rupees 30 million. The consolidated EBITDA for quarter 3 FY22 stood at rupees 109 million as compared to an EBITDA loss of 28 million in quarter 3 FY21. Consolidated PAT for quarter 3 stood at rupees 30 million as compared to a reported loss of 93 million in quarter 3 FY21. Coming to the liquidity position, the gross debt for Max Ventures for continuing operations stood at rupees 224 crores as on 31st December 21, whereas we had cash and liquid investments of rupees 76 crores, resulting in a net debt of 148 crores for the real estate business. We expect divestment proceeds of rupees 600 to 650 crores from our packaging business, and our balance sheet will strengthen even more, which will be deployed in the real estate business going ahead. I would now like to hand over back to Margaret for the question and answer session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who would like to ask a question, please press star and 1 at this time. The first question is from the line of Puneet from HSBC. Please go ahead. Puneet from HSBC, your line has been unmuted. Please go ahead with your question.
Yeah, thank you so much, and congratulations on making this good move of getting to a pure real estate business. All the best for that. My first question is on why enter into residential. Residential and commercial are two very different businesses with different capital allocation requirements and different skill sets also needed. Why get into both of them when you were doing quite a good job on the commercial side to start with?
Thank you, Puneet. I'll take that. This is Sahil here. So Puneet, this is a great question, and we discussed and deliberated a lot on this. First, we believe that real estate is a very local business. So us being in NCR, having delivered in NCR, I think there is a value to that. Second, there is a significant opportunity in the residential business as well, given that if we look at a city of national capital region, more than 20+ million people, and maybe not more than 2 or 3 trusted real estate developers that exist. So we see a huge gap in the market as an economic opportunity. Third, if you look at the macro fundamentals over the next 10 to 15 years, if you look at countries, for example, other countries where real estate contributes significantly higher number to the GDP than it does in India. So we believe that there is a huge opportunity for real estate as an industry to grow in NCR, which is one of the largest greater cities, that exist. There are hardly one or two developers. We are local. We are based in NCR. We have a track record of delivering. And finally, we have a very strong brand, which resonates with people for trust, for credibility, and for delivery now, particularly in the real estate space. We want to be able to bring and uplift the experience for people, not only from a work well perspective for office, but also live well for residential. Having said that, we are extremely cognizant of the risks that come with the residential real estate business. And as you will see in the coming quarters, we are going about this in a very calculated and risk-adjusted basis. And you will see that in times to come. Thank you for your good wishes and question again.
Yeah, so why Dehradun, right? So Dehradun is not necessarily NCR. Why venture into smaller cities?
No, so Dehradun is not. We are only going to focus on Delhi, Gurgaon, and Noida. Dehradun was our first project, which we had done 4.5-5 years ago, when we were first just trying to experiment in the real estate space. So we experimented with a very small project of just 20 villas. That was our first experiment in 2016. Moving forward, we are not going to be doing any more developments in any other cities other than Noida, Delhi, and Gurgaon. So our focus is NCR. This is a project which is 5 years ago, which is translating into the revenues as per the accounting methodology today.
And in terms of products mix, do you want to position yourself as one making similar villas or gated community or plotted? How do you envisage positioning for yourself?
We see opportunities across the value chain. We see opportunities across plotted. We see opportunities across gated communities. Our strategy is to be, like I said, across these 3 micro markets. And as we have already demonstrated in Max Estates, to be at a premium to that particular micro market. So it's aspirational premium offerings on the back of a sustainability footprint that we are going to be able to do. So that's our strategy.
Okay. And similar to Workwell, is there a plan to do a co-living kind of project within the residential project as well?
We do not have detailed plans as of now, but our residential projects will be what we call an ecosystem across various offerings, some commercial, F&B, a little bit of a health center, intergenerational, living. So to really be able to impact and positively drive the consumer experience. So our developments are going to be focused on the end consumer experience and not on, not just to launch it from a brand perspective, but that's the basic hygiene that it comes from the house of Max. But more importantly, it will uplift the consumer experience in terms of what we are looking to do.
So sorry, did I get it right that you're trying to do a mixed use development project?
No, it will be residential, but there will be other components that will be ancillary to the residential ecosystem that enable a better consumer experience for the people who will buy.
Okay, so primarily residential with some retail shops here and there, basically.
Exactly. Just whatever is required for, like, for example, a small educational center, a little health center, F&B, retail, centered around residential. If you see what we've done in the office space across Max Towers and Max House, you will see that these elements have added tremendous value to the experience of our customers. For example, Max Towers is the only building probably in NCR that has an in-house auditorium, that has an in-house early learning center for children, a hair salon, a health center, a meditation center, a wellness center, 4 different independent restaurants, event spaces, so on and so forth.
Okay, understood. And when you said 125 rupee of rental for, I think, Max House, that was right, does that include the CAM charges also, or is it pure rental?
No, it's pure rental.
And how much is the CAM charge over and above that?
the camp charges over and above. Go ahead, Rohit.
Hi, the camp charges are about 24 rupees plus actuals on HVAC and other consumption.
All right. So for the occupiers' perspective, they'll be paying close to 150 bucks there plus.
Yes, broadly, plus whatever they consume, and these costs change in line with input costs that change over the year.
Right. Very interesting. Thank you so much. This is very good. All the best.
Thank you. Thank you.
Thank you. The next question is from the line of Sanjay Kaul from FE Securities. Please go ahead.
Good morning, everybody. I wanted to find out page 5 of your presentation. You said that you're in discussion maybe half a dozen landowners to acquire and develop prime land. Are you going to acquire the residential portion also, or is it going to be the commercial portion only?
Sorry, you're talking about page 5?
Page 5 of your presentation, the last thing, says that Maxwell is in advanced discussion with nearly half a dozen landowners to acquire and develop prime land parcel in NCR.
Correct.
Are you going to acquire the residential portion also, or is that going to be joint development and acquisition will only limited to the commercial portion?
Yeah, I'll take that. So our strategy, both for commercial and residential, we are looking at mix of opportunities. Some could be an outright purchase of the land, and we develop completely end-to-end, we 100% own and develop it. There are opportunities which are also on joint development model. So we are evaluating both the models in commercial and residential, and what we have shared with you on page 13 of the IR deck, all those opportunities are mix of outright and joint development.
Okay. Page 6, you've given the approximate rental that you receive in 23, but 24 there's no mention made, where I think there will be a substantial jump in rentals going forward because the Max House part 2 and the Max Square will be up and running. So give me some figure on financial year 24, what kind of rentals could we expect?
Nitin?
Yeah. Good morning, Kaul-sab. So Kaul-sab, in terms of for FY24 and FY25, we expect Max Square and Max House, phase 2 of Max House, both fully operational. Although we don't give any forward-looking guidance in terms of revenues, but in terms of basis the current prevailing rentals, we expect an incremental revenue of close to 60 to 80 crores flowing to us, or rather 70 to 80 crores flowing from us to us from lease rental income on the current reported basis, the current prevailing rentals. And as in the past, we have been able to outperform the market, the local micro market by more than 25-30%. We expect to have a significant jump over that numbers.
So 22, 23, you're given a guidance of 50 to 55 crores of rental. 23, 24, thereabouts, can I expect it to go to 125, 130 crores?
Not exactly in 23, 24, but for FY25 for sure.
25 for sure. Okay. Yeah. We're looking at 125. Because the presentation over here gives me very detailed of each project, but consolidated figures are not there. And in page 13, you have written, you've given the details over here. Actually, now we are talking of 23 projects over here. With discussion with covering about 37.8 million square foot. Right on that?
Yes, your understanding is correct.
24 projects over 37.8.
Yeah.
Okay. Okay.
Yeah.
And you said one of them will come up.
Clarify. Kaul-sab, just to clarify, as you would see in any real estate business, the key to success is to have a large funnel with deals at different stages.
Mm-hmm. Yeah.
Right. And what we have told you on page 13 is basically different deals at different stages where we are active.
Correct. All right. And this Delhi one, when do you think this thing will come about, the NCLT process, and you will actually land yourself with this project? Any idea?
So again, very difficult to put a timeline to a court process. As I mentioned in my narrative, our plan is in NCLT. There were a few objections to the plan. The good news is most of those objections have been withdrawn, and subject to the third wave, we are expecting the hearing to begin and the speed to get expedited. I think that's the good news. By what time it will conclude, difficult to say given the court process.
But could we expect something by March 2023?
Absolutely.
Yeah. Fair estimate. Yeah. Okay. So that is also taken. Okay.
Also, just to add to that, on Delhi 1, I think the good news is that we have been able to resolve the few outstanding matters pertaining to the project. So what we believe is now it's just a matter of time before the court start progressing normally, and we should have an expedited response to Delhi 1.
Mm-hmm. And this is a mix of commercial and residential both? And shops
right.
and similar, yeah.
That's right. It's a mixed use combination of service residences, retail, office.
Okay. Now, what I see is the market cap today is about 1,700 crores. You receive net of tax about 600 crores from sale of this 500 crores from sale of this film project.
That's correct.
Yes.
That comes to about 1,200 crores and 150 crores debt you have right now. 1,350 should be the enterprise value of the company.
No, also this would not be the right value to look at it. The way we look at it is currently our enterprise value itself would be in the range of 1,700 to 1,800 crores. Considering we have got Max Stars, which is if we cap the Max Stars at the prevailing cap rates and Max House, plus our investments at Max Square, considering the stage where it is, the cash and our investments like Azure Hospitality, we believe our EV would be more closer to 1,800, 1,900 crores.
No, I'm talking about stock market. 1,700 there.
From market perspective, we are at 1,700 crores, but from an intrinsic value, we are more closer to.
Intrinsic value is something different. Yeah, I'm not talking about intrinsic value. That may be more also depending on your whatever assets you have. Now I'm just looking at some 1,400 crores. If I need to buy out Max Ventures completely, how much do I have to pay? I have to pay 1,350 crores for settling the bank and getting 100% equity in Max Ventures. And I'm looking at 1,350 crores invested. It will give me 125, 130 crores of rental 3 years down the line. That is what I'm trying to figure out.
Yeah.
Minimum.
I think, sir, more importantly than the math for us, like I said, strategically is for us to deploy this capital to really scale ourselves in the real estate business across both the commercial and residential footprint. As we have demonstrated with the track record that we have been able to execute, deliver, and even turn around distressed projects. Not only that, we've been able to command a significant premium to the micro market. So the way we look at it is not with respect to today's market cap, but we look at it in terms of a quantum of value creation that can happen as being the top 2 real estate companies in the National Capital Region, which we have absolutely all reason to believe that Max Estates can become.
Correct. I'm just looking at for a person who's holding shares today, what is the valuation over here versus what you would get in future. Of course, the value will go up. Thanks a lot.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Faisal Hawa from HG Hawa and Company. Please go ahead.
Yeah. So by analyzing over the years has been known to really nurture business at the right time of their inflection point, and to his credit, he has sold off the business also when they really reached almost their 80% value. For a period of almost 20-30 years. So there's a question to Sahil. What is he actually thinking will happen in the real estate sector, and
I'm sorry to interrupt you, Mr. Hawa. Your voice is breaking up. It's not very clear.
So should I repeat the question?
Yes, your question, please, sir, again.
Yeah. So by analyzing over the years has been known to
not only known, he has actually, nurtured business right at the inflection points of those verticals. And, he has actually then built, executed, and, even sold off the businesses when they reached almost their full value. So what are his thoughts at this point of time over, how the real estate sector will pan out, and what is the, absolute, absolute thoughts about, real estate being an experience rather than, just being a product which has to be delivered?
Absolutely. Thank you for the question, Mr. Hawa. I'll just share with you, I think this is a great question because Mr. Singh has identified real estate as the next big opportunity for Max Group and for the sponsor. He believes that real estate is at an inflection point. We are at a cusp, particularly in the NCR region, of real estate becoming more institutionalized, more corporatized, and we want to be at the inflection point of that in the industry. With the onset of the regulations like RERA, GST, and all of that, what we have seen, it has made real estate more an institutional play. More so with corporates like Godrej Properties and others that you have seen that have come into the real estate space has enabled this to become more institutionalized. We believe that this is an opportunity for a brand like Max, particularly in the NCR region, to emerge as the top 2 preferred brands in this region across the asset classes that we operate in. Most importantly, we believe this is also an endpoint that the experience of the consumer, we want to change from it being an investor-led experience to a consumer actual end user-led experience. And if you see what we have been able to do with his attention to detail across every small aspect of design development in each of our developments, we have been able to successfully command a significant premium to the micro market and also have been able to have 100% occupancy for people to be able to experience that. So we believe that consumer experience driven on the back of efficient design, sustainable design, considering the importance that this has in the role of climate change and in our journey as a country of the goals that we've set from sustainability perspective, and on the other end, an institutionalizing or a corporatization of real estate are the trends that we are seeing that Max wants to be at the forefront of for NCR. We believe that, and finally, as I said in my other comment also, we think that real estate is going to increase its contribution in the overall GDP for India as it grows, and thus with all of these 3 factors, we believe Max Estates is in a beautiful position to be able to capitalize on this in the decade coming forward.
Just 2 more questions. How will New York Life, really assist us in our journey? That is one. And secondly, don't you feel that once the inventory which is in the system gets totally utilized or sold, it could then bring a short squeeze on the market, and that could really lead the investors or the so-called speculators back into the market? Big inflection point, at least a short-term inflection point.
Right. I'll answer your first question, which is with New York Life. Absolutely. New York Life is committed partner with us. They've been a partner with us across, as you know, our life insurance business for 18 years. Then they exited the life insurance business, and now they are partnered with us in the real estate business. So absolutely, New York Life is a global institution. We've had a very successful and a financially rewarding partnership for both parties, and they continue to support us. They have close to $600 billion of AUM, of which there's an allocation of a few percent at the global level for real estate. We are their only partners in India from a real estate perspective. So we think that absolutely that partnership is bound to grow leaps and bounds. In terms of the second question of an inventory that exists in the NCR market, I think if we were to peel the layer of what is the inventory that is ready, and that number is significantly smaller than the inventory that is obviously the total inventory, because a lot of it is stuck or not completed or not anticipated to be completed. And finally, our philosophy is to really provide a superior customer experience. And when we focus on consumer experience, we believe that there is going to be a pull of customers towards the developments that we do. As a case in point, and I'd like to just take another minute to explain this. in 2020 and in 2021, with the COVID pandemic, work from home became a norm. Office leasing fell about 55 to 60% from 2019 to 2020. It recovered marginally in 2021. But Max Estates, through its development, actually did more leasing in 2020 and 2021 than we actually did in the previous year. So we have seen that when the product is at a good value proposition for a customer, it is uplifting the customer experience, and customer can trust the brand that is a developer brand, which has been a huge issue in the National Capital Region. There will be a flight to quality or a flight to trust, which we believe Max will be a beneficiary of.
Thank you.
Thank you.
We lost his line, so we'll move to the next question. Before we do that, we would like to remind our participants, you may press star and 1 to ask a question. The next question is from the line of Shreyans Mehta from Equirus Securities. Please go ahead.
Yeah. So, sorry, I joined a bit late, so I'm not sure whether this question has been answered or not. Sir, just wanted your thought process of, moving into the residential segment. Primarily, had we, did we have some land bank? Still, it made sense for us to deploy cash and just activate those assets. Whereas we are doing pretty good in the commercial segment. So just wanted our thought process, what is actually the driving force for us to move into the resi segment?
Okay. So I'll take that. Thank you. So as I discussed earlier, I think this was the first question also. So residential is, like I said, we are focused on NCR. We believe real estate is a local play. Within the National Capital Region, there is a lot of opportunity. So with the brand that we have, with our track record that we have done, with our desire to scale the business focused in the National Capital Region and not go to other geographies, and with the huge vacuum that exists in the residential space in the National Capital Region, with a city of more than 20+ million people, with not more than 2 trustworthy developers for development, with the recent churn that has happened in the real estate industry, we believe this is a significant opportunity for us to be able to scale our brand and our business in real estate development, more so by being able to provide consumer experiences that are significantly superior to what we have provided, what have been provided to customers in the past. So that is a philosophy. We did one project about 4.5, 5 years ago in the residential space. We got good traction of it. We've taken on the learnings from those projects to hopefully scale the residential business in times to come.
Sure. Yeah. And if I may just add to what Sahil said, just to given the importance of this question, just to build on what Sahil said, if you look at some of the data points, right? Let me give you a few data points. Number one, almost 2/3 of incumbent developers in Delhi NCR, which is our playground, are either out of business or are getting out of business, and most of them have had residential exposure. Number two, to your question on Max not having a land bank and we are going out to acquire land through outright or joint development, as we are going out, and as you would have seen on page 13, more than 10-15 opportunities that we are actively involved in, our experience is that this is the right time to go out and acquire the residential land, as the residential demand and supply situation is turning around. Number three, if you look at residential demand and supply situation and if you look at what has happened in 2021, both residential launches and sales are at 230,000 units, pretty close to where it was in 2019, pre-COVID. And number four, again, post-COVID, if you just compare the market share of corporate developers, and if I take the example of NCR, and if you look at both sales and the launches, the share has more than doubled in just a matter of 2 years in terms of where consumer demand is gravitating to. So if you look at those tailwinds and then club with what Sahil said in terms of our brand, in terms of experience-led development that we are aiming to develop, we think we have a huge opportunity here to create value and create experiences for customers.
Okay, I totally agree with you, that opportunity is there, etc., etc. But is it fair to assume? So my question is, pertaining, to the capital employed side, So if I were to look at it this way, are we believing that the best for the commercial is over, or there the returns are almost done, and the resi is the segment where you can get more returns from there? Is that understanding right?
I'll answer. No, not at all. We believe that commercial is a great place to be. We are continuing to grow our commercial footprint. We are not going to scale down our commercial footprint. We are going to scale our commercial footprint. But with the exit of our packaging business and the capital war chest that the company has and the significant market opportunity that exists for Max Estates, we believe as well is a huge opportunity, particularly given the cycle where we are in the residential real estate space. It also gives us the opportunity to diversify within an asset class within a region. So from a overall risk-adjusted basis, we believe this is a very beneficial strategy. And to one question that you had asked, I'd also like to add, Mr. Mehta, that yes, the family office, the sponsors, Mr. Anurjit Singh, owns a very large chunk of land in Delhi NCR, which is under the land pooling policy, which is probably the last available land in Delhi as a geography that gives us a development potential for 6 million square feet. So Max Estates, being the listed arm, can take advantage of this asset that he owns over the last 10-15 years in a relatively asset-light way to partner and develop this asset. So there is a huge benefit of scale, opportunity, synergy that exists for us, not only with other people's other land banks that we can jointly develop or partner or look at outright opportunities, but also for what the sponsor owns in the family office. So there is a significant upside, we believe, and a value creation opportunity as a result of this for Max Ventures.
Got it. So, sir, I might be wrong in my thinking, but, as an investor, the way I look at it is, that in terms of commercial, the risk is much lower, the returns are better, and in terms of, in terms of project life cycle as well, commercial is much lucrative as compared to the resi segment. So why not, continue to invest and build on that rather than, going for risk diversification? Because what we believe is, the way I look at it is, that moving into resi would not make you risk. I don't think so. It will be risk diversification. In fact, by moving into resi, don't you think we are moving into a risk zone?
Like I said, we will definitely grow the commercial business. We think it's a great business. We have now developed a brand, credibility, and customer traction. So definitely we will grow in the commercial business. But like I said, we do see a huge opportunity in the residential business as well. And I had mentioned this earlier. We will scale the residential business in a very calibrated manner. It is not going to, in a sense, put to risk our strong balance sheet in a significant manner, and we will, and as you will see in the next coming months, as we hope to announce our first residential project, it will be a calibrated approach in the residential business to which we believe, and a combination of both commercial and residential focused in NCR will help significantly scale the return metrics and all parameters financially for the company.
Got it. And so one last question from my side. So, strategically, or say 3 years, 5 years down the line, how do you see the mix in terms of resi and commercial? So commercial would be 70 and resi would be 30?
We have already stated our objective that we would like to do 1 million square feet of commercial and 1 million square feet of residential every year. That's our stated objective, and we hope to be able to achieve that in a few years from now.
Okay. Thank you very much and all the best. That's it from me.
Thank you very much. Thank you.
Thank you. The next question is from the line of P. Sachdev from Albatross Capital. Please go ahead.
Yeah, hi, good afternoon to the Max team. Just a couple of questions. How will the capital deployment take place from the proceeds of the packaging business? And secondly, what is the IRR for these upcoming projects? Thanks.
Rishi, can you take that, please?
Yeah. So as far as capital deployment is concerned, as Sahil said, our aspiration is to add 1 million square feet in commercial and in residential. The mix actually will also be a function of the acquisition model for respective asset classes, the outright versus joint development. So it will be customized on a case-to-case acquisition basis, but we are looking to deploy this for both opportunities in commercial and residential. Number two, in terms of IRR, as we have stated earlier as well, when we evaluate these opportunities and look for high teen equity IRR, basis conservative underwriting.
So my first question was more on the equity contribution, this 500 odd crores post-tax that you're going to receive from the proceeds. How is this going to be deployed? Is it going to deploy it over a couple of years? Because see, LRD becomes a very attractive proposition for you guys, having such an attractive commercial portfolio.
Yes, it will be deployed over a few years as we bring in more opportunities in residential and commercial. So it will get deployed. You are right. What also gets added to our war chest is not just the proceeds from the divestiture, but also huge upside we have with respect to the LRD opportunity from Max Towers and Max House, and in future from Max Square.
So this 500 crores equity over a couple of years is a reasonable assumption?
500 crores of equity over a couple of years is a reasonable assumption, yes.
Thank you.
Thank you. The next question is from the line of Sumit Kumar, an individual investor. Please go ahead.
Hi, thanks for the opportunity. I had two questions. The first is, what would be the total development cost for Max House Phase 2 and Max Square? And how much has already been spent till date?
Yeah, so if I can come in over here, the total development cost of Max House Phase 2 would be in the range of 90 crores, and of that we have spent close to 15 crores out of that. So the remaining capital needs to be deployed. In terms of Max Square, the total development cost outside the land is in approximately around 285 crores, after which we have spent close to 120 crores has been spent on that.
Okay. Okay. And sir, my second question is, what will be the total, annual revenue potential combining Max Towers, Max House Phase 1 and 2, and Max Square project?
So, in terms of Max Towers, the total revenue potential, as stated earlier, would be in the range of 35 to 40 crores lease revenue plus CAM income. And in terms of Max House Phase 1, the revenue potential would be in the range of 15 to 18 crores. And Max House Phase 2 has is 50% larger as compared to Phase 1. We expect the revenue for that in the range from 22 to 26, 27 crores going forward.
Sorry, 22 to?
27, 28 crores.
Okay. Okay, understood. Okay, sir. Thank you so much. That's it.
Thank you. The next question is from the line of Viraj Shah from NM Securities. Please go ahead.
Hello, hi. I just have a couple of questions. Apart from commercial and residential, do you plan to develop retail spaces as well in future?
Thank you. Go ahead, Rishi.
Okay. So Viraj, our focus right now is on commercial and residential. Of course, as a part of commercial development and residential-led development, as Sahil mentioned earlier, there will be a retail as an ancillary component to curate the entire work-well experience and the live-well experience in commercial and residential opportunities.
Okay. And with respect to Max Asset Services, could you just give some insights of how you plan to scale up work-well suites?
Yeah, hi. Viraj will take that. So as of now, Workwell Suites, we've got a very encouraging response with a 95% leasing. We will continue to evaluate opportunities for growth, both in our projects, the upcoming ones that the team has mentioned, as well as very selectively we're exploring the feasibility of doing it outside our buildings.
Okay. Thank you.
Thank you, Viraj.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. As there are no further questions, I would now like to hand the conference over to Mr. Sahil Vachani for closing comments.
I just wanted to thank everybody for your participation and hope you continue to stay safe and stay well, and hope to connect with you in the next call next quarter. Thank you.
Thank you. On behalf of Max Ventures and Industries Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.